There's a recent article that I just read recently that I think you might find interesting. It's called "Some Buyers Bet the House," and what this article entails is that it's breaking down how many of today's buyers are literally banking on rates dropping so they can refinance later. So here's kind of what we stood out in the article. 56% of recent buyers are counting on refinancing down the line to make their homes affordable, and many of those buyers are educated on where rates will go and have been where they have been going recently. So they also mentioned that Gen Z and Millennials are feeling the pinch. So more than 1 out of 4 of them are already feeling financially uneasy after buying. Stress is at an all-time high, especially for younger buyers. We're seeing about 90% of them feel stress during the process. A third of them said it was major. Refinancing equals a lifeline. For 1 in 4 buyers, being able to refinance is critical to their financial well-being. And lastly, they're buying because they feel like they have to, or otherwise they'll fear that home price will continue to rise and they'll get bought out later on. So many buyers know price will continue to rise, and now it's time to get in before they get priced out of the market. So having a look at this big picture conversation, so what we need to do as professionals out there is to have this big picture conversation with our clients right now. And I say we, as in let's prepare the buyers on the fence on where rates will go going to the long-term game plan. Now, obviously, as a mortgage professional, we need to make sure that these people, before they enter the home buying process, is that they can indeed afford a home as is. We can't always bank on home prices going down or rates to continue to rise going down and again lower payment. So we have to factor that. Yes, we want to factor that rates that they can afford the payment that they're currently in position to. Also, one of the things that we should be advising our clients is that if you're in a employment that is that you feel very secure in, and so that's another reason why you should be able to proceed and not have the concerns. If you're in an employment where the market's getting kind of soft in the employment area, which we are seeing in this current environment, then I could see where you might want to step back. Besides, because the last thing you want to do is being stressed out and having to try to make your mortgage payment, and perhaps later on having issues down the line in that regards. So that's the last thing we want for you folks. So if you guys want to check out this article, I will leave a link down below and check it out for yourselves.